Spencer Israel here with Aaron Hodari, Managing Director at Schechter Wealth. Aaron, thanks so much for coming by to our humble abode here in downtown Detroit.
Thank you. I'm happy to be here.
So Schechter Wealth, you guys are out in Birmingham, Michigan. Tell us a little bit about your firm and what you do. So,
yeah, I like to describe us as an entrepreneurial financial services firm, and that is because of the genesis that we've taken over the years. We started just as an insurance group, and then we added the investment advisory practice, and then recently we've added direct private equity investing, and the entrepreneurial is meant to be, who knows where we'll be in 5 years. So.
You're unique in the fact that you have a few different parts of the business. What exactly are they?
So our core focus is delivering great financial solutions and advice to ultra high net worth investors.
Okay.
We might provide advice in a business that we are not in, right? We might help our clients understand their tax situations or legal implications of their estate. The business lines that we work in on a day-to-day basis are life insurance, investment advisory, and direct private equity investing.
And you've been with the firm
5 years.
5 years. How'd you kind of end up at Schechter?
So it's an interesting story. I started my career at BlackRock in New York. I was on the institutional side doing a lot of fixed income work. And it was about 2010, and I had come back to Michigan, and my family had worked with Schechter for years. And we were doing a portfolio review, and I started looking at this asset. I didn't even know what it was, right? It was some unique type of thing that they had done. And I was saying 10% yield. I said, well, can't be 10% yield, right? The interest rates are, zero, and you're making nothing on bonds. How are you doing 10%? And I didn't believe it, and started learning more about it. And this specific transaction was we called it annuity arbitrage. We arbitraged an annuity company against a life insurance company, bought both products simultaneously, and it created a guaranteed, call it 10, 12% cash flow for life. And at that time, I remember we were working so hard to pick up 2.5% in a fixed income portfolio. Just opened my eyes to the types of things that were out there, and started talking to the principals there, and eventually decided I had to be a part of it and help them grow.
I want to talk about your business and different areas of the business. So you guys do estate planning, retirement planning, tax advisory, a whole bunch of services. You kind of fell into private investment, where you guys invest in private companies. Explain how that kind of happened.
Yeah, so explain how it happened and also why we are believers in it. So individually, for ourselves, for our families, for years, we found attractive investment opportunities in the private markets. In the aggregate, research shows that private markets earn 3 to 4% in excess of public markets over time. So there is a return premium you get for that illiquidity. So we liked the space, we've been doing it, and we started to get access, because of our client base, to some really unique opportunities and ideas. And what we realized is that access was not widespread. Now there are companies that are democratizing that access, but for the most part that access was not widespread. There was really attractive opportunities that had unique downside protection. In the private markets, you're often buying preferred shares with liquidation preferences, stuff that is different than public market investing. And we knew our clients wanted that access. And so what we decided as a business is that instead of telling our clients, go do it on your own, we were going to help them by curating and finding and evaluating opportunities that we thought made sense and bringing that to our clients. As a business, we decided we don't want to make money on that unless our clients make money. So this business is called Schechter Private Capital. We take no management fees. We pretty much only take performance fees. When we take performance fees, they're generally after a pretty attractive return hurdle of 10 or 15%. So we started the business because we were already in it on our own, and we knew our clients would be interested. And we believe in the business because the return potential is pretty unique in this environment.
What do you guys look for in a private company? What signals to you that this is worth maybe looking deeper?
It's a great question, and I think we have to look at it different than a lot of maybe other, like a venture capital fund or private equity fund. The reason is we are not managing a commingled fund with 15 companies. Each investment we do is in a specific company. If you get a 0, no matter how many times when you meet with your client on the front end or meet with a prospect, say, while we love this, we're putting our own money into this, but there's a chance of loss, it doesn't matter, right? You can disclaim, warn them. If you deliver a 0, they're not coming back. So what we look for are businesses that, and we put some parameters around this. So we want businesses with at least 10 million in revenue. In reality, we want a lot more than that. We want later stage businesses. We don't want binary outcomes, right? Great, this could be the most phenomenal, life-changing drug, but if it doesn't pass FDA approval, the company's gone. That's not something that we feel comfortable putting our name behind for our clients. We want businesses that we believe in and use the product. So the easiest smell test on a business before you even want to dive in on the financial opportunity is, go use the product. I'll tell you, one of my friends sent me a deck for Bird, the scooter app, a couple of months ago. This is crazy.
They have info trade in this city. Let me tell you.
Oh, so I haven't even seen them. No, I see it right out there.
So everywhere.
So he sends it to me. What are you talking about? This is crazy. The company was started 6 months ago. I don't get it. I went out and visited him in LA, and I think we took a Bird everywhere we went. We would go to the drugstore just because it was like fun to hop on the Bird and ride it. It's really amazing, but because I was in Michigan and hadn't used one yet, when someone sent us the potential opportunity, so what do we look for? We look for companies that we love. So if it had been different and I'd been living in LA and really understood it, we would have looked at it different. So we look for companies that we can get downside protection on in the form of preferred shares. We would prefer not to buy common shares and stuff like that.
I asked you earlier about sort of fintech and technology and whether your clients come to you with suggestions on technology, but I'm curious if they come to you with suggestions about investments and types of assets, because there's a lot, especially in the last 10 or so years, there's been a lot of innovation in terms of asset classes and different types of investments. We know that, even just ETFs that are conventional are only like 25 years old as an investment class. I'm wondering what you guys do in terms of the alternative investment space.
Yeah, great question. There's 2 parts to that. The first part, I think, really is, do our clients come to us? As an advisor, if there's something we want to do, we want to go to our clients with that. Right now, we are not actively investing our clients' money in cryptocurrency. So we get a lot of inbound requests about cryptocurrency.
I bet.
And the way I describe these types of things is we want our clients to feel personal with their wealth. There's a lot of people who have a lot of wealth, who are afraid to spend it, or they feel beholden to it. We want people to be empowered by their wealth. And so if a client comes and he has a real interest in cryptocurrency, our job is not to say, no, you cannot invest in cryptocurrency. Our job is to make sure that they don't make a financial decision that's going to really hurt their family. So maybe 0.5% or 1% allocation to cryptocurrency. Don't go put half your money into it. So we encourage our clients to feel in touch with their investments. But if there's like an industry that we really like right now, real estate credit. So building's worth $100. Someone's going to pay $100 for it. They're not going to write a $100 check. They're going to write a $50 to $80 check, and the lender is going to come in with a mortgage. Depending on the risk in the property, you can generate, if it's a stabilized property like I assume this is, there's going to be a really low cost mortgage on this. If it's a property that just lost an anchor tenant that's only 65% occupied but still in a great location, they might need bridge financing. And so those types of environments and opportunities can generate 8+ % returns for investors. If we like that, we don't want to wait for our clients to come to it for us, because if we like it, we should be doing it already. So we're actively out bringing investment opportunities to our clients that we like, but we absolutely are all ears. If our clients bring us an idea, we're going to listen. The second part that you mentioned was what do they like today?
Yeah.
What they like today is they like real estate credit. They like all types of credit instruments. They like low volatility. They like low correlation. So alternatives has become a very interesting place.
It's almost mainstream.
It is mainstream.
It is mainstream.
Right? And so years ago, it was only institutions. Right? 40-50% of endowments money is in alternatives. Individual investors, on average, might be 5, right?
Yeah.
And over time, access becomes more democratized, and you see those allocations increasing. There's a lot of bad alternatives. So it's just like the stock market. There's thousands of stocks. There's going to be great ones and bad ones. There's a lot of, there are thousands of alternatives. There's good ones and bad ones. And so going into alternatives has to still be laser focused on what am I trying to achieve. For our firm, alternatives, we don't look at as we're looking at as diversification, absolute return, and you accomplish that by looking for things that are less correlated to the equity markets that still can achieve an attractive return, like real estate credit and some other stuff we did.
So I was going to ask you also about the future of RIAs and wealth managers, but you kind of already answered that. Those that do just investment advice maybe will be hard pressed to retain clients in a few years.
Well, I believe there's a separation here, right? So there are investment, there are stock pickers, right, or money managers.
Right.
Money managers, as long as active management is around, which I believe there's merits to passive and active. I don't think one's going away. As long as active management is around, you still need investment advisory firms that do money management. But the problem is when the money manager becomes a financial advisor, their option for money management is only internal. And it's very hard to be the best at everything. So our belief is that, yes, you'll continue to have money managers, but the financial advising profession is going to move more and more to a holistic, broad-based approach that touches on a lot of facets of a client's financial life.
And not just their portfolio.
Not just, are we buying Apple today or are we buying Google tomorrow?
Yeah. What keeps you up at night? Professionally speaking.
Clients, because they're calling all times a day. But I would say technology integration. I want us to be at the forefront of what's out there. As an advisor, if you don't prepare your clients for the broad range of outcomes, we don't know what's going to happen in the future. So we need to prepare our clients for the broad range of outcomes that can happen. If you don't do that, those clients are going to be mad at you. When that doesn't feel good, they're going to leave you. So what keeps me up at night is making sure that we are constantly out there delivering our message to our clients in a clear, concise way, and making sure we have an understanding. Because the last thing I want is to ever have a client think that we didn't inform them or prepare them for the broad range of outcomes that financial markets can lead to.
All right, Aaron Hodari, thank you so much.
Thank you.